I don't just want to go out and borrow a whole lot of money to stimulate the economy because that's not responsible and we're trying to get out of that. And I'm trying to instill confidence in businesses that, hey, we're here to back you. We're going to get some capital going. We're going to get some investment.
I'm sure they'd like to get re-elected next year as well.
Yeah, they would. They would.
We are back in your life. Today, we are talking about the OCR announcement. The Reserve Bank is set to cut interest rates again, but we're talking about 25 basis points. Is it going to move the needle? We do have a fresh budget that's just dropped, but Mike, confidence for business, for consumers is just on the floor. We've got that bloke over in the States who's still thinking, do I, don't I with my tariffs? Mike, what do we want to talk about?
I think we start with the budget. So I've just come from a talk with Nicola Willis where she explained everything she wanted to do with the budget, everything she wanted to achieve, what was in it, what wasn't in it, and fundamentally the type of budget it was, right? And she calls it the no BS budget, which is basically, you know, we've leveraged up significantly in the last government. I think the stat was something like debt had grown by over 2 times, and that they need to be more fiscally responsible and trying to, 1, balance the fiscal responsibility with 2, promoting growth at the same time, right? And they've done a couple of things there. Investment boost was the big one with the upfront deduction of 20% after cost of assets in the first year on top of depreciation. And there's some other things in there as well. That's really the big one, right? Now, it's difficult to try and balance both of those things. So I do feel for her when, you know, she's like, I don't just want to go out and borrow a whole lot of money to stimulate the economy because that's not responsible and we're trying to get out of that. And I'm trying to instill confidence in businesses that, hey, we're here to back you. We're going to get some capital going. We're going to get some investment.
I'm sure they'd like to get re-elected next year as well.
Yeah, they would. They would. I actually quite liked the sound of the opening up New Zealand for foreign investment. Mm-hmm. And the way that they're going to do that, and they take a really similar approach to Ireland from that perspective, where basically if you come in with a boatload of cash to invest, they will basically handhold you through that process, right? So here are the businesses, here's how to do it, here's exactly where to put the money, here are the great opportunities, you know, like really give a white glove service to people who are going to do large scale investment in New Zealand.
I've got this great opportunity in Citibank in Auckland. It's this new startup podcast. They've got a huge upside and they're looking for a minimum investment of $10 million. The sign right here.
What do you say, sharks?
Yeah.
No, and then, okay. So, I mean, budget, yeah, like it's a tough one, but I think there's definitely some gold in there. Opening up the KiwiSaver to younger people to, you know, encourage the spending was another really key thing. But, you know, that is what it is. And we're trying to instill confidence in businesses. But fundamentally, the cost of capital, the cost of money is going to be one of the key pillars that gets business confidence going again, right? And that is our official cash rate. Your business lending is directly tied to it. Your home loan interest rates are influenced by it. And we do know that most home loans or some home loans are funding businesses. So that's a really key thing as well.
Okay, well, let's get straight to it, Mike.
Yeah.
What are we thinking is going to happen tomorrow?
25 basis points cut. I said 50 previously, trying to be a little bit controversial. I think it's 25. Banks have already started pricing at 25. So I'm pretty sure that's what it's going to be.
Do you think it should be 50?
Yes, I think it should be 50.
Why?
I think it should be 50 because the price of money is effectively the gas pedal in the economy, right? And there's other things. Taxes are effectively a handbrake or a brake. There's a whole lot of other stuff in there. But what we need to do is put the pedal down and just absolutely try and get the machine working, right? And, you know, what do businesses want? They want some relief, right? And a bit of confidence going forward that if they start investing now, things are going to get better. If you lower the cost of money, the whole country feels wealthier, right? Everyone feels a little bit richer. Everyone goes out and spends a little bit more. Buy that car, do that thing, buy another house, whatever you do. More money is going to be flowing around the economy. That is what we need.
My question though, Mike, is if we're going like we're going to do 25, then 25, then 25, like if you know that's where we need to get to a certain point,
yeah,
why not just get on with it?
It's already priced in. That's the thing. What we're actually kind of watching with this one is not so much the 25 basis point drop. It's what is the forecast going to do? And if that forecast, that tracker comes down to below kind of, or, you know, maybe 2.5 below there, then we're kind of on, right? Like that's when we're going to get some real moves happening in interest rates. I actually don't think your short-term rate's going to adjust that much. If it's a 25 basis point drop, it's basically priced in. 1 year might go from 4.99 to 4.95 maybe. I don't know.
We're in the kind of high fours in terms of like a one year fix. The OCR will go to 3.25, we think, tomorrow. Jared Kerr's going, instead of more like aiming for 3%, we should be aiming more for 2.5% in terms of the OCR. Do you agree with that sentiment?
100%. And I think the fear with some people is that they will think that that is the Reserve Bank overcooking it, and that's too much stimulus, and we'll be back to that kind of sugar high interest rates of 2021. We are so far away from that is not a possibility, right? Like we were at 0% and we had a global pandemic. There was no economy. We're not getting back there. But a stimulatory interest rate is what the country needs. And 3% is not that. That's a neutral interest rate.
Yeah. And so like if we get to like say 2.5% OCR, because, the banks then go, the OCR drops, but the swap rate's in the background, or the 10-year rate is this and whatever. It's all a bit bloody confusing.
Yeah, it's opaque. It's designed to be opaque.
Yeah, at 2.5% OCR rate, what's a 1-year home loan rate looking like?
Like probably around 4.5%, maybe a little bit lower, maybe, but usually about 2% that's on top of that OCR.
So, Mike, that's what's happening locally. But the thing I do kind of hear from people from time to time is the overseas noise. Potentially will interest rates start to go up? And I'm keen to talk about all of that after this break.
Looking to buy, refinance, or restructure? Well, get in touch with Lighthouse Mortgages. We have a team of professional mortgage brokers that can help you make the right decisions and give the right advice. So click the show link below. Now, back to the episode.
Okay, Michael, so I'm keen to break down. We've talked about Trump quite a bit.
Break it down, Jimmy.
We've talked about Trump quite a bit. He's created, the share market dropped like 20%. Then everybody was like, this Trump guy gets stuffed. And he's like, whoa. Now, I'm not saying that I do want to do tariffs. I'm not saying I don't want to do tariffs. Let's maybe put this on hold. Let's put it on ice.
What are you, George Clooney?
For 20, I'm not great at accents. I tell you what, I'm not going to do.
You do an amazing Australian accent.
I tell you what I'm not going to do is accents on a podcast because they're going to be cancelled real quick. So tariffs have been put on hold until July, but there's business owners don't like uncertainty. Investors don't like uncertainty.
Yeah.
So there's still a lot of like...
I'm not even sure there is any uncertainty anymore, to be honest, James. Like, he was like, I'm going to do all of this, blanket tariff everyone. Went to the negotiating table with China, and I don't know, I think it was a day or two, they came back and were like, we're basically going to roll it all back. And you get a 10% tariff and a 20% on top of that fentanyl tariff or something. Like, I'm just not sure that there is that much uncertainty anymore. I can't see them going back to the negotiating table on tariffs and cranking it back up again. I'm not sure that Donald Trump wants to, touch the bloody red hot fire again. Like it's not worth it. And we're starting to see more confidence out of the States because of that, right? So yeah, look, I think most of the uncertainty is probably over from the tariff perspective.
How about the concerns around interest rates actually increasing? Is all of that gone with the tariff noise dying down? Is there any possibility that interest rates will increase?
Well, you're speaking in absolutes, and I can't speak in absolutes because that's, I'll be
all
wrong.
Right, mate.
Yeah.
The scenario I worry about is New Zealand has gone through all of this pain. Interest rates are now on the decline, and there are some people who will go, there is a scenario where, because if interest rates start going back up, in my head, we're like, we've got some growth that we need to like.
But that's already forecasted. That's already forecasted for like end of 2026.
But why is it forecasted?
Because that's the official cash rate tracker, or the market's priced in, and it'll go up again because they anticipate that rates will stay low for a while. We'll get the growth and they'll go back up. Yeah.
And the growth component, right? Is there a scenario where we don't get the growth, there's an impact on things overseas, and essentially where interest rates start going back up and we don't get any benefit locally?
No, I don't think so, because you're only going to start putting interest rates back up when you see the economy starting to cook again, right? And I don't mean overcook, but just, inflation's running a little bit higher. We just need to kind of curtail it off a little bit. And, those signs should come pretty quickly when they do start to happen. Yeah.
We say that 2025 hasn't worked out how we thought it would. To date, has it?
But before you just talked about like everyone's gone through this pain, or like the pain from the recession, I agree. There hasn't really been any pain from Donald Trump's tariffs. They hasn't really done anything. It was a lot of noise. And they're like, what did we say? We're like, it'll all blow over in about 4 weeks. And it's probably been 5 weeks and it's all blown over, right? So I'm just not sure there has been any pain from that. And it'll cause some headwinds and some slower growth, but I just can't see it impacting things over the long term.
I think the main impact of the tariffs is it's impacted investors' sentiment, their ability to invest.
And consumer confidence.
Yeah, and that means that opposed to maybe if I pulled the trigger in like March or April, now I'm kind of reassessing again, going, do I want to hire the extra person? Do I want to invest in my business? Do I want to grow? And has enough time gone by for the average business owner to go, I feel confident yet? Maybe a little bit more time needs to go by, especially for those that are thinking about it on an international scale.
Oh, 100%. And the property market's no different, right? Like we're seeing a lot of people who are actually delaying property moves until spring now, right? They put it off. They're like, no, you know what? We're just going to hang on for a little bit longer and we'll do that thing in spring.
All right, we'll wrap it up there. The OCR announcement, I don't think it's going to be particularly exciting. It's continuing to go in the same direction. We were trying to encourage and to grow the economy, and everything is going in the right direction. It takes just more time than we'd like it to. Much love to Lighthouse Financial for sponsoring this episode. Please subscribe to the channel, give us a review, give us a like, and we'll get you next time.
Cheers.